Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation where we are going to be inviting Asian Paints management on the program to help us decode the quarterly earnings for the December quarter. The net profit here has fallen by about 4.6% to 1,059 crores. What we've also seen is that the net sales, however, have seen an uptick of 3.7%, coming in at 8,867 odd crore rupees. Again, a jump of near 4% from the previous year's quarter, same quarter. We've also seen that the company has reported exceptional items amounting to 158 odd crore rupees in Q3, and this is primarily due to two significant one-time expenses that the company has done. There's also that the company has incurred a 64 crore rupees cost or an kind of an impact related to the new labor code implementation that the company has done. We've also seen the PBDIT margins expanding to 20% of net sales, up from 19% in the corresponding period of the previous fiscal year as well. So let's welcome Mr. Amit Syngle, the MD and the CEO of Asian Paints, to decode the earnings for us and to share with us an outlook on the company as well. Warm welcome to you, sir, and thank you so much for taking the time out. Well, you've noted in the press release that the demand continues to be subdued. So let me kickstart by asking you on that aspect as well. What were the key reasons? Why do you feel the demand is subdued despite Q3 being heavy on festive season and wedding season as well? We've also seen a slew of government measures by way of enhancing the disposable incomes in the hands of people in this year so far. So why do you think the demand in the paint segment continues to be slow, sir?
So overall, what we see that the quarter has been reasonable for us.
Okay.
Coatings growth was 4.4%. The overall volume which we registered was 8.3% in the coatings business overall to that extent. And we see that possibly it was led by October being on a lower side. October, the festive period, was a very short window in terms of what we see, just about 15 days. And that also, we had a little bit of a prolonged monsoon, which definitely affected a lot of painting which was happening in that point of time to that extent. So October was definitely subdued. We have seen some uptick from a point of view in November and December, and that is something which possibly, the exit rates of the quarter has been definitely much better. I think the focus definitely was in terms of looking at the B2B business, which has been doing well on the heels of good investment by government in infrastructure projects. The developmental activities continue. Private capex is something which is increasing, which has also given a fillip to the industrial businesses in terms of what we are seeing. Even the global business has done well. So what we see is that
Yes.
demand was largely led from possibly the government initiatives which were there more from a point of view of private capex, infrastructure growths which were happening to that extent, which we have seen results in our B2B and the industrial businesses to that extent. And I think
Okay.
the more importantly, the margins have got a very strong
Yes.
flip. We are at about a 20.1% PBDIT margins, which is year on year and sequentially, higher.
Right. So on the decorative business, you've delivered a 7.9% volume growth. But what we had seen last quarter that you'd managed to post double-digit growth. That was when most of the brokerage houses believed that, the worst is behind and things are turning a corner. And, we were trying to understand whether double-digit volume growth will be sustainable. But this time again, there is a blip. Could you help us understand why is this blip? Is this again a one-off? Would you again be comfortable in going back to the double-digit volume growth margins?
So overall, what we see is, as I said, in coatings, we are at about overall 8.3%. I think today, I think is a reasonable volume growth in terms of what we see. I think not much difference between an 8.3 and a 10% in terms of the overall growth as we see it. I think going forward, the endeavor is possibly that you kind of really see that you keep the band around 8 to 10% in terms of how we would like to kind of really grow in the market to that extent, and look at possibly avenues which are more strongly supported by the environment, especially from a point of view of looking at some of the B2B businesses, looking at in terms of how we are looking at the upgradation in terms of some of the premium luxury categories in terms of going forward, fueling the waterproofing construction chemicals business in terms of looking at it, and really focusing on the industrial businesses as well. So I think those are the directions in terms of what we are taking, possibly to kind of see that this is a band in terms of volume growth which we can honor as we go forward.
And what about the value growth, sir, and the outlook on that? Along with this, if you could help us understand what product mix will really help you up your game in the value growth segment, sir.
So overall, as I said, this quarter industry coatings growth has been about 4.4% in terms of value. Going forward, what we see is that the gap between the volume and the value is going to be in the range of about 5.5%, which will remain overall to that extent. And therefore, accordingly, I think we are targeting that if today you grow at a certain pace in terms of the volume, I think the value would be at this kind of a difference in terms of what would happen. I think to kind of really take the value thing further, we are also looking at some of the premium categories in terms of how we can focus, how we can galvanize them further, and that's the endeavor which is there across businesses in terms of looking at saying that we can galvanize growth to that extent so that we kind of maintain this gap as we go forward.
Right. Sir, on the margins guidance, since you said 20.1% and you've improved that also, would you have more levers to improve or your outlook going forward as far as the PBDIT margins are concerned? Or is sticking to 20%, sustaining it at this level will be your core focus?
So what we have done, definitely this year and more strongly from a point of view of quarter three, we have done a lot of cost restructuring at our level in terms of looking at how we can really revisit the fixed costs in terms of in our business to that extent. We have also looked at a lot of material efficiencies which we have tried to bring, whether it is from a point of view of sourcing, purchasing, or even from the point of view of formulation efficiencies to that extent. I think those have been strong areas of focus, which has given us the necessary impetus apart from the fact that we have seen deflation in this quarter to that extent. But I think overall going forward, our focus on cost structures would remain in terms of what we are doing. We are also not seeing too much inflation coming as we see the quarter ahead in terms of looking at it. So therefore, our endeavor would be keep on investing into the market, investing into the brand, look at newer technologies in terms of what we bring, newer chemistries. So the investment is more in terms of the business, in terms of what we want to kind of do so that we can really propel the demand a little bit more in terms of going forward. And therefore, our margin guidance of 18 to 20% would remain.
Right. So I wanted to also ask you on the labor code impact. Is that done and dusted for Q3 or will there be any residual impact that we could see probably in Q4 or in the new fiscal year?
See, largely the areas in terms of gratuity and leave encashment, I think those are all kind of really taken as a one-time kind of hit in terms of what we have done. I think going forward, while I think the enumeration of the overall labor code happens properly, I think we will look for any big areas which would come. But in my opinion, I think the most of it is something which we have kind of taken on.
Right. So you also pointed out that international sales have improved significantly, 6.3% of an uptake. You've also seen significant performance or a steady performance in key markets of UAE, Sri Lanka and Ethiopia. How is the outlook going forward from here? Of course, we're also looking at a changed world order. How are you looking at the things going forward?
Yeah, so I think the geopolitical uncertainties still remain in terms of what is there, but we are still saying definitely in Asia, especially Nepal and Lanka, we are seeing good growth in terms of what we are happening. Even in Middle East and Africa, I think we've had a decent growth in terms of what we are seeing. I think the markets, Middle East and Africa, will remain stable in terms of going forward to that extent. So largely we see that basically we should kind of really cruise at good businesses in quarter four as well.
Right. Sir, I remember having spoken to you on many occasions over the last 1.5 years or on quarterlies when we were focusing largely on the internal competition also rising in the domestic market as well. Although you have been always confident of, continuing with your USP in the market and your market share leadership that you have. Now, the positive part is that from the last 2 quarters, we are also seeing many brokerage houses, analysts also talk positive on this aspect, saying that a large part of the pain that was being seen in the company as well as in the industry because of the high competitive industry is also seeming to be behind. What is your current stance, sir?
See, what we see is that, I've been always maintaining that some competitive intensity would always remain in the market. We
Yeah.
are also seeing consolidation happening in the paint market. And therefore, apart from the newer players, there is also consolidated players which are going to be in the market to that extent. Largely, we have seen a lot of focus from the competition in the area of pricing, discounting, and so on and so forth to that extent. I feel that today going forward, possibly our model is very clearly that we are looking at market rejuvenation innovation. We are looking at really building the brand going forward, looking at a lot of areas of innovation, new products, so that we can excite the market with newer prepositions, new chemistries which we can get. I think the whole area of investing in terms of the technology, which is AI, and looking at how do we kind of really listen to the consumer and cater to the customer more effectively is something which is going to be our aim as we go forward. At the same time, a lot of investments which are being made in the B2B and the industrial businesses, apart from some of the capexes which we have put from the point of view of backward integration going forward. So I think our stance would be very clear that today, basically look at the bigger picture, drive the larger areas in terms of what we can do so that we can possibly really galvanize the industry and look at overall demand.
Right. Lastly, sir, I want to ask you, we're just days ahead of the union budget. What are your expectations this time? Do you have a long wish list?
No, we don't have a very long wish list, but our wish list is very clear that we would like the government to continue the imperative from the point of view of infrastructure developmental projects, so that basically we can keep on accelerating the private capex, which is happening. That consumption is very, very strong to that in terms of what we see. I think that is why we are looking at seeing that government kind of really accelerates that, puts possibly more impetus in terms of looking at that. Apart from that, we would definitely see that if there are any impetuses for the construction industry in terms of what they bring, along with more liquidity in the market, so the customer is always willing to spend.
Fantastic. Thank you so much, sir, for being with us and explaining to us your quarterly earnings and your outlook as well. I wish you all the best for the upcoming quarters. Hope to catch up with you once again very soon.
Thank you so much. Thank you.
Thank you so much. All right, viewers, we'll wrap it up on that note. That was the exclusive conversation with Mr. Amit Syngle, the MD and the CEO of Asian Paints, explaining to us what has gone into the quarterly earnings, resilience despite the subdued demand, and the outlook on competitive intensity definitely reducing, but some of it can continue. But despite that, the company's focus will continue on its growth areas and growth focus sectors as well. Thank you so much for watching this special edition. But do stay tuned, as up next you'll see much more coming up on markets coverage.